Welcome back. Thank you so much for staying with us. It is still iBrand Day Break, and we have Mr. Charles Fakreha in the house. I used to say it every time Charles comes in with the red jacket, we know something has happened on the floor. Good morning, Charles. Thank you for joining us.
Good morning, Uche.
Where's the apple? Why are you wearing uniform come today?
Yesterday we had another major event and the symbol of capitalism in the country. That is the stock market. And we are seeing that, yes, the economy is really struggling, but some of the operators, business owners are also not relaxing. They are doing all they can. So yesterday we hosted an indigenous company, Ella Lakes PLC. People used to know that company as a fishery company, but now they have transformed, to an integrated agricultural company. So into cash crops, soya beans, and so many other agricultural activities and all that. So we needed to encourage them because, of course, I think it was this same week we talked about the poverty eradication, World Food Day and all that. So we cannot be doing all that and we're not focusing attention on our agricultural sector. So that was why we had to host Ella Lakes, and it was a very interesting outing that yesterday for them. So kudos to Ella Lakes, and I just believe that they should continue to do more, and of course maybe come and talk to iBrand so that we can do more of the publicity.
Of course,
for them.
we're
Because
open to
iBrand is a station for business. It's business first.
Where are your business partners
Yes,
actually?
so I think we'll work out something like that with them. Yeah.
All right, so today's topic on personal finance, I'm personally very interested in, because, when you talk about mortgage, you cannot think mortgage and think Nigeria in the same conversation. And that's because I have done my own research, and of course, I'm going to ask you questions about that. But I'm going to let you have the floor and talk to us about, mortgage in Nigeria.
Yes, people have even attack me and say, do we actually have mortgage in Nigeria?
I could ask that question.
But let's first of all understand what mortgage is all about.
Sure.
Mortgage is just simply, it's a form of loan that a lender, which in this case he says the mortgagee, will now extend to a borrower who is now the mortgagor.
Mortgagor.
Yes. Now, the loan, the money that is given to the borrower now, it will use that money to finance a property. Now, he or she, that's the mortgagor now, the borrower now, is not going to use that property as a collateral for the loan that the lender has given to him or her. That's simply what mortgage is. And with the understanding that he will now be paying that money gradually over a period of time. Usually they say 10, 20, 30 years. Of course, with one-digit interest rates. Now, technically, that property will not belong to the borrower because you must have signed all the documents that it is upon you finish paying that mortgage. That is when you can now transfer the property to the borrower. All along, it is the lender, that is the mortgagee now, that owns the property. So when you finish, you discharge, you finish paying
the interest rate and capital.
Yes, everything. That is when you can now have legal title to that property. However, for the 10, 20, 30 years, you are living in that home. Let's use that word, home. That is what basically is mortgage.
Okay. Do I get to ask questions? Because it's nice that you mentioned that it is usually on single-digit interest rates.
Yes.
But research have shown that in Nigeria, for the people who are bold enough, who have strong hearts enough to go into it, you pay in double digits. I think at some point it was a whole 16%, if not more than
even
that.
More than that, yes.
Yeah. So how do you even begin to spread a 16%? Let us even say that is what it's at, because I know it's more, to over 30 years. That is almost 3 times the amount that the home is supposed to go for originally. So would you still encourage people to go into mortgage?
Okay, let me answer your question this way. Housing has been, or shelter has been, a major problem over time. And we need to differentiate between what is housing and what is shelter. You know, just have a shelter over your head. When you talk of that, those who that live under the bridge, they have shelter, but they don't have housing. And housing is becoming difficult for the average Nigerian to access. If you look at home ownership in Nigeria today, it's just basically 10% of our population that actually owns a property. But if you go to the UK, we are talking about 72%. If you go to the US, about 78%. Even some African countries here, even in South Africa, their home ownership is even higher than Nigeria, maybe about 50-something%. Why? One, the high cost of building materials, high cost of lands, then inflation, infrastructure, and of course, even our laws. Now, why you are seeing that kind of increase in the interest rates is because the bankers who are providing these mortgage services, they are in business to make money. And what is the average interest rate? We are seeing inflation rate is going up. Average interest rate today as we speak, if you want to take any loan, whether it's mortgage or for business, no commercial bank will give you less than 25%. Yes, because they tell you cost of funds and all that. And now we are here talking about mortgage. It's supposed to be single digits. How do we reconcile that? Now, the government seeing the need that housing is very key. We've done some research and we discovered that most of the fraud you see people commit, what they call white collar fraud, you know, people in offices and all that. If you trace, most of those funds end up, even money laundering, most of those funds end up in property. And that's why today, if you go to Abuja, there is a lot of unoccupied property in Abuja, and even some highbrow areas in Lagos and other big cities. And that's why a former minister will tell us that we don't have housing deficits in the city. Because maybe he has gone around and seen that there are so many properties nobody is even living. Mansion, nobody is living there. But I will not agree with him if he tells me that there is no housing deficit in the country today. There is a lot of housing deficits. In fact, the last figure we got was about 24 million housing deficits. So the government now said, okay, how do we address this, your question of interest rate being a double digit? What can we do? As far back as 1992, the government came up with National Housing Fund, 1992, which every worker, as long as you work in an establishment, maybe with 5-7%, both in the private sector and in the public sector, you are expected to contribute 2.5% of your basic salary to a fund, which is called the National Housing Fund. And that pool of fund will now be used as a loan to assist these workers. Government now said that interest rate should be, I think, 6%. So you can see government intervening now to ensure. That is strictly for mortgage banks. Now, if you are going to a normal commercial bank, of course, they will not follow that government rule of 6%. Now, government has to now authorize mortgage banks. And today in the country, we have over 30 mortgage banks in the country. Well, just permit me to just mention some few of them. Though there's no adverts, but can I mention some of them?
It's okay, feel free.
Okay, yeah. We have Infinity Mortgage Bank. We have Nigerian Police Mortgage Bank. We also have FBN Mortgage Bank and City Code Mortgage Bank. So all the institutions have a license to carry out the business of mortgage banking in the country. Now, to also make housing affordable to the average Nigerian, they also came up with Federal Mortgage Bank of Nigeria. So that is the bank that is managing the funds that are being contributed by workers, the National Housing Fund. So all this money is resided with the Federal Mortgage Bank. So for a worker, if you want to assess that this is your single digit interest, what you now do is you need to have been contributing to the National Housing Fund, where you will have your own number. Then, if you have contributed for, let's say, 6 months, you can now say, okay, you want to access this loan now. And how do you go about it? You must have a relationship with a mortgage banker. That is, you open an account with these institutions that government has licensed to operate the business of mortgage banking. You need to have an account with them. And of course, the maximum amount of money you can collect for that loan, it has been increased to be 15 million. It's now 50 million. But you must have in your mortgage bank your own savings, at least 10% of the amount of loan you want to collect. So assuming you want to collect 15 million, you must have at least 1.5 million naira in your mortgage bank. Then you can now approach your mortgage bankers and say, look, I have contributed for this long in this National Housing Fund, and I have an account with the mortgage bank. In my account there, I have about 1.5 million. So I qualify to access this loan. Of course, they will give you all the forms you will fill. There are a lot of requirements that you must meet. You know, one, they need to see your bank statements. They need to see your tax clearance. They need to see your BVN, you know, kind of KYT document, all the documents. They will give you the requirement. Then you fill it, and of course they package it. They will now present it to the Federal Mortgage Bank. So those ones will now assess. Of course, note, they'll also be checking your credit score. They want to see whether you are reliable, you know, and of course you do a lot of processing. One most important thing they do there is you also have to pay for insurance. I say mortgage insurance. Because this mortgage is for 20, 30 years. They also have to check your age and the amount of years you still have working. And that's why we keep saying that for mortgage to really work, it must start the very first day you are given employment. Because you still have at least 20, 30 years ahead of you. And the interest rate is fixed, which is that 6% as the case may be. So you'll not be getting that double-digit interest rate if you go by this Federal Mortgage Bank process. The only time you can get above that, the 9%, or sorry, 6%, is when you are going for a commercial mortgage. That is commercial banks, because the funds that they get, they have to pay interest on those funds, and so they have to make money. But for the Federal Mortgage Bank, it's a government bank. Their role is to support housing development, housing ownership in the country. So that is the process the average worker can assess mortgage, can assess property getting single-digit interest rates.
All right, you did mention that, you know, it would be nice to start as soon as you get your employment letter.
Yes, yes.
So, but that is mostly for people who work for the government. What about people like us who work in the private sector?
Yes, I mentioned myself, both private sector, organized private sector, you have at least 5-7 workers. As long as you contribute to this pension fund. Yes, because now they're even saying most of these workers cannot even save money. So what they have in their pension fund, you know, they can access that fund as part of their equity, as part of their contribution. So imagine if you don't even have a mortgage bank account, but in your retirement savings account, that is your pension, you have, let's say, about 1.5 million there. So that qualifies you also to take a loan of 15 million without actually having any relationship with a mortgage bank. But our advice is easier, because with a mortgage banker, they know how to advise you, and they will tell you what we call affordability table. When they look at the income that your current income, and of course the number of years you have left in service, they will factor all that, and they will know how much you'll be paying on a monthly basis for the next 20-30 years. They will have to do all those computations.
Let me just quickly ask you this question, because we're pressed for time.
Yes.
I understood your, excuse me, I understood your definition about mortgage, right? You know, vis-a-vis my own understanding as a legal agreement between you, yes, between you and you as the mortgagor, like you explained, and a financial institution.
Yes.
I understood that it's a fund given to you for the project of property.
Yes.
Now, let's say, for instance, you want to go into having a property and you approach, you know, a mortgage bank to give you some loan based on interest rate.
Yeah.
And in the process, something else comes into your mind. Unknown to the mortgage bank or the institution who gave you that loan.
The lender.
Good. Is it unhealthy, let me put it that way, for you diverting that fund into something else, provided you're going to still remit that money and the interest? Pardon my question.
Sam,
because
I'm looking at you like this.
because something can just come into my mind and I decide not to want to do that building project again and decide to put it into something else.
That's
Is it allowed?
It's not allowed. And first of all, for this mortgage, we are talking from the Federal Mortgage Bank, which is more accessible by civil servant and organized private sector. They don't even give you the fund to buy land. It's to buy the property.
That's already built.
That's already built. To buy the property.
So that loan is really stiff.
Yes,
It
it's
doesn't
to
give
buy the
flexibility
property.
at all.
But there's another one again that they call rent to own. You can also have it rent to own. Just as you pay your rent on a more yearly basis or monthly basis, you can be paying for the next 30 years.
Over
it becomes
time,
your,
then
becomes your
okay.
house. It's also government sponsored, you know. So all these are available. But the advice I will give, because we don't have time, is for our listeners, our viewers, you know, to have impact and understand there is mortgage in Nigeria. Let us agree on that. Then approach the nearest mortgage bank closest to you. But of course, you can even reach iBrandTV because they have all the experts there that can direct you as to how you go about your mortgage project.
Yeah, but quickly, let me also ask you this. Is there a point of, say, you pay up front your mortgage, you pay off, say, God bless you somewhere, somebody in your family now hits jackpots and give you the 50 million naira cash. Can you pay up front?
Yes, you can pay upfront.
You know why I asked that question? Because I'm just sitting here imagining that, let us assume I started working early enough. I started working at 21. So if I started working at 21 and I'm supposed to pay this mortgage for the next 30 years, that is, it might not be very, very
convenient.
For me. And then you can imagine someone who never got a job until he was 35. Then he's paying for a house for the next 30 years.
They will consider
so that's the house will be ready when he's 60. And I'm sure by that time his first child is already planning to get married or something. So how does that make economic sense to spend that amount of time on a project that you almost won't get to now relax and enjoy?
No, but you're already living in the house. And they have calculated the amounts you'll be paying on a monthly basis.
Sleeping with one eye closed.
No, but look at it this way. They have calculated, right, what you are paying will not really affect you. They do all the calculations, you know. Like, you're not expected to pay, if you earn 100,000, you're not expected to pay more than 33,000 naira on a monthly basis. You know, as the case may be, for that mortgage. Or let's say 30,000 naira. Because that's why it is affordable. And as your salary increase, your income increase, that's 30,000 is still what you'll be paying. It now left to you now to say, I want to quickly pay this. You can opt to increase, as long as it's convenient to you, want to increase what you pay on a monthly basis. For you know what, a mortgage that is 30 years, maybe by 20 years, you have finished paying. Yes.
Okay, but can you also say, as my salary have increased now, I don't want to increase the rate at which I pay, but I want to pay 2-3 years ahead. Is that possible?
It's possible. People do it, yes. Like people in the financial service sector, you know, they pay them this housing on a yearly basis. You know, once they get that money, you know, they just use it to pay. And of course, it goes to reduce the outstanding mortgage. Also know that you also have to pay insurance, because in case anything happens to the mortgagor, the financial institution, that's the person taking the loan now. The financial institution, financial institution has to recoup their money. So you need to it has to be insured.
So it goes together with an insurance.
Yeah, so that the insurance company will take liability, because the bank need to collect that money so that they can give other people.
Beautiful. All right. Very eye-opening one today. I must say that I enjoyed this segment, Charles.
Lecturer.
Thank you so much for coming on the show. We appreciate your time.